The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now up 5.41. The 10-year Treasury is up 4 basis points, 4.172. That's good for the seniors. Not so good for mortgage rates. The mortgage-backed securities are down 20 basis points, which means interest rates are up again. And speaking of home loan rates, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming rates locked yesterday at 7.026. 30-year jumbo rate, 6.746. FHA, 6.788. USDA loans, the 30-year for those rural areas, in most cases, no down payment, 6.849. And the best loan on the market for those that earned it. The 30-year VA loan, 6.733. But why is that happening? What's driving the market right now? Well, a lot of it has to do with inventory. Mortgage bonds, they were lower in the early going, but have clawed back a little. Now they're down again. It all has to do with that 10-year. New recent high of 4.176. Housing News, existing home sales, which measures closings on existing homes, showed that sales were down 1.5% in September at a 4.71 million annualized pace, which was slightly stronger than expectations, but still a decline. On a year-over-year basis, sales are down 23.8%. Inventory has crested, as it does every time this year after the normal seasonal build, and declined for the second straight month to 1.25 million. There's now 3.2 months supply of homes, which is tight because 6 months is considered balanced. But if you look at active listings, there are only 732,000, which means that 41% of the inventory in the existing home sales report is under contract and not truly available. This speaks to demand, as a normal market has 25% of inventory under contract. When looking at the month supply of available homes for sale, it's really 1.9 months. The NAR, National Association of Realtors, Chief Economist Lawrence Yun, underscored our beliefs on the housing market and how dynamics are so different than during the housing bubble. Quote, despite weaker sales, multiple offers are still occurring, with more than a quarter of homes selling above list price due to limited inventory, unquote. Yoon added, quote, the current lack of supply underscores the vast contrast with the various major market downturn from 2008 to 2010, when inventory levels were 4 times higher than they are today, unquote. And while there are reports that homes are sitting longer on the market, if they are priced correctly, they are still moving fast. Average days on market increased slightly, 16 days to 19 days. And 70% of the homes were on the market for less than 30 days. First-time home buyers have accounted for 29% of sales, which was unchanged from the previous report, but amazingly still higher than 28% last year. Cash buyers accounted for 22% of sales, which declined from 24% in the previous report, while investors purchased 15% of homes, which is down from 16%. Make sure that you're using the different tools that we have available to help you demonstrate this to buyers and sellers. Foreclosures and short sales accounted for roughly 2% of all transactions, which is up slightly from 1%. Redfin yesterday said in September, new listings fell 22%, the largest decline since May of 2020 and April of 2020, respectively. They went on to say that demand is slumping due to surging mortgage rates, but prices are being propped up by inflation and a drop in the number of people putting their homes up for sale. Initial jobless claims, which measures individuals filing for unemployment benefits for the first time, decreased 12,000 to 224,000 after 2 weeks of increases. The volatility of up and down within this report continues, and we're not getting a clear signal. Continuing claims on those that continue to receive benefits after their initial claim rose 21,000 to 1.385 million. The Philly Manufacturing Index, measuring manufacturing activity in the Philadelphia region, was down almost 9 points after a 9-point decrease was reported in the New York Manufacturing Index. Manufacturing is clearly in a recession and is another sign of the economy slowing and in a broader economic recession. Yesterday, the Fed's beige book had recession written all over it. Citations of the word recession have gone from 10 last month to a record high of 13 in October. Additionally, businesses reported that the pass-through of higher costs was becoming more difficult and they were receiving pushback from consumers. This means that companies have reached their max in pricing power and should contribute to lower inflation. So that's the Mortgage Minute today, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.